Welcome to the Flex Forward podcast, where grit meets growth. With your host, Nic Espanet, bringing you stories of resilience, reinvention, and the real climb to success.
Awesome. Everyone, welcome to the Flex Forward podcast. Today, we're blessed to welcome Adam Roberts. I've known Adam and his wife, Emily, for several years. Got to know them through a local real estate investment group, and really good people. Glad to know them and have them, count them as friends and peers within the real estate world. Adam is a co-founder of A&E Investments. I'll let him give you a little more information on that. Adam, welcome to the Flex Forward podcast. Glad to have you today. Can you let our listeners know a little more about you?
Yeah, Nick, how you doing, man? Thanks so much for inviting me to be on. This is definitely an honor, so thank you. So my wife Emily and I, we run a investment firm, A&E Investments, where through the experiences that Emily and I have investing in mostly alternative assets, we also bring those asset investments to our investors. And so really for us, it started off in single family investing. Emily and I have been in the real estate space for the better part of 12 years at this point. Starting in single family, we transitioned over to multifamily syndications back in 2017 and have been doing that really ever since. As the real estate market has cycled, we have diversified into several different areas over the past couple of years, including mortgage note investing for cash flow, as well as oil and gas investing for cash flow. And so, so I'd be happy to jump into any one of those. But we've really enjoyed what we've been doing in the investment space over the years, and have a lot of loyal investors. And so it's been a lot of fun.
That's awesome, and it's great that you guys were able to pivot. You know, as things kind of tightened up in the multifamily world, that you guys had an alternative to present to your investors that was still viable. Or maybe more viable at that time. Not that real estate was 100% dead, but it tightened up a lot for a while, and maybe loosen up. We'll see how the next few months go. So we're cautiously optimistic. So out there in the just investment world in general, and there's a lot of competition of different people, trying to vie for potential investors. What's something that sets you guys apart?
From day one, when we started working with people's money, and this goes all the way back to our single family days. We had private investors, family that would be private lenders for us. We were always extremely transparent, and we gave a lot of updates. We loved talking about the projects. Didn't matter how big or how small. We always loved to dive in with people, and if we were using other people's money, we knew that it was good stewardship. And so for us, first and foremost is just the transparency, good news or bad, right? The frequent updates and the things that matter to people as they hand over their hard-earned money.
Now, I think that communication is so important, like you said, good or bad, because in the real estate world, you're not going to have 100% batting average all the time, or 1,000 batting average. So there's going to be challenges, there's going to be hiccups. You're dealing with people and property and municipalities and the markets. So just communicating in those challenging times, I think, is probably more important than when things are going smoothly. That
totally
people want to know what's going on. So do you have something that you feel comes easier to you that others may find challenging?
Yeah, for Emily and I think we're really good at analyzing deals and finding value. It's the reason why, since we got into the investment space, we've had a lot of success as far as return on investment goes. We take our time choosing the right investments and ensuring that there's value there and that we can actually return capital to the investor. So I would say that's definitely a superpower of ours, being able to identify the value and extract the value, execute on the value strategy, which, whether it's real estate, it doesn't matter what investment vehicle it is or what space it is, being able to execute and extract the value, identify, execute, and extract is key. And so I think we're really, really good at that.
And that's awesome, because if you get a little too far, you're too conservative, you'll never get a bid won. an offer taken. So you got to find that line where you're conservative, you see the value, but you're maybe pushing just a little bit so you can still win a deal. Because you can be ultra conservative, but you're likely never going to get picked as a buyer
Yeah,
on a deal.
you need to have a vision, right? And again, it doesn't matter what type of project it is. It could be a multifamily apartment complex. It could be an oil and gas well that needs renovated. It just doesn't matter. To your point, if you're in this business long enough, you're not going to have a perfect batting average, right? There's things completely outside of your control that always come up. That's the reason why I think, in recent years, we've gotten really good at diversifying so that, as things cycle in one part of the business, you ramp up in a different type of business, and you have multiple irons in the fire. So
no, that's extremely wise, very wise words. So if someone's listening and wants to get better at something that you guys, underwriting or know how to find different alternative investments, what's something you suggest they do?
I really think you need to build an operating rhythm around whatever you want to go after. I mean, say you want to start buying real estate, doesn't matter what it is, right? You need to, the learning part is obvious. The education part, you really need to get educated. There's many ways to do that, right? Find a network, meet people. That's how we got into the business. We found a network. We met people that were doing things that we wanted to get into. And so we had a lot of, call it unofficial mentors, masterminds, if you will. Mm-hmm. So that kind of goes without saying. However, once you've decided that you really want to get into something, I've found a lot of success building an operating rhythm around it. And so what does that look like? Okay, let's say I want to buy multifamily apartment communities. To some extent, it's a numbers game, regardless of what part of the cycle you're in. And like you said, Nick, at the beginning of the show, hopefully things start to shake loose here pretty soon. But, are you ready with a good operating rhythm once they do? Meaning, are you, once or twice a week underwriting a deal, sharpening your pencil from an analysis standpoint? Every so often, maybe once or twice a month, going out and actually looking at properties, like actually physically going to the real estate and looking at it, regardless of how serious you are as a buyer, right? This is all about building a operating rhythm and being, not sitting on the bench, like being in the game. Meeting with people, brokers, property managers, and these are just examples around real estate.
Potential partners. Just trying to build those relationships.
Yeah, potential partners, totally, right? It's like never, there's never a dull moment. You always want to identify something, some type of rhythm to really define. And maybe it's, this activity once a week, this activity twice a month, that activity 3 times a month. And so you can just check it off and say, hey, yeah, I did that. Even when times are tough and things are boring, at least you are going through the action items. So.
Yeah. Keeping relevant within some of the relationships is important.
Some of the people I've talked to who are still doing real estate deals today, like good value add real estate deals today. When you really dig in and peel the onion back, they didn't just wake up and decide to make an offer on a specific property, right? It was, oh gosh, this is the 50th deal I've underwritten this year and the 20th property tour, and I met this broker 15 different times, and finally we, so yeah, there's something to be said about the operating rhythm, and it gets easier. So
yeah, you got to kiss a lot of frogs to find a princess.
Yeah.
Princess. Sometimes. So what is one of the biggest challenges you've had to overcome in your career path through, going from a W-2 or just in the alternative investing space?
Yeah. For us, I'd say one of the biggest hurdles we overcame was when we really realized that we were too concentrated. And for us specifically, it was multifamily apartments, real estate in general, really. And because of that, we were exposed to any sort of external market force that might impact the investment vehicle. Interest rates is a great example, or insurance is another good example, right? It's as soon as you get bad news in one piece of the pie, it affects your entire portfolio if you're too concentrated. And anybody who's listening, who's a seasoned investor and has already figured this out, is has been through this. But for us, it was an eye opener. I mean, we back in 2021 or so, when the federal funds rate started to ratchet up and things got tight. Coincidentally, insurance and property taxes also started to really tighten. Cash flow from real estate. I mean, we had deals that were cash flowing double digits annualized, and that went straight down to like 1, 2, 3% annualized. And for Emily and I, this is our living, right? This is what we do for work essentially. And so we very quickly had to pivot and find something that was more of a cash flow play. And so, we decided at that moment, this is back in like 2022, 2023, to explore mortgage note investing, and really, really amplified our cash flow versus what we saw on the real estate side, which was all growth, just hoping and looking forward to a sale.
Yeah, no, that's awesome that you guys had that vision and were able to make the pivot. That's a bit huge. And so just something for listeners to think about when you see things tightening up, maybe start exploring other avenues, something to think about. So it sounds like things are going pretty well for you guys. And, as things start improving, other people, sometimes folks start thinking about passive investments. And I know this is what you guys do, so I kind of know the answer to this, but what are your thoughts on people getting into different type of passive investments or alternative investments as they have more success in their W-2 job or as an entrepreneur?
Yeah, really, to me, it doesn't matter. I mean, some people are just built to work, right? I mean, some people, that's just what they're built to do. Time is our biggest asset, and I didn't invent that. That's an adage that a lot of successful people live by. But we really, really, even as entrepreneurs, we underestimate what our time's worth. And so regardless of whether you're a W-2 wage worker, stay-at-home mom, stay-at-home dad, or you're a very successful general partner in a business, always looking out for your time. Passive investing, to me, investing in other people's deals is the key to getting your time back, right? And when you find the right people to work with, there's nothing better, right? There's really nothing better.
No, it's awesome. The true mailbox money. I still miss the days of actually getting a check, even though it was difficult to get them deposited, but I did love getting a true mailbox money, a check in the mail for something. I mean, granted, I didn't work to earn the money on the front end, but I sent it to somebody, and then their actions are sending checks to us on a quarterly basis or monthly basis. Now it's ACH, so it doesn't feel as special. I do miss the checks a little bit on that time. Good stuff. As we're wrapping up our interview, you have any exciting plans or initiatives in works for the next 6 to 12 months? I know you guys have a new baby, so you probably have your time's pretty booked.
We're growing the family, yeah. Otherwise, Emily'd probably be on the show here with me. She's taking care of Stella, our newborn. But yeah, for us, I think after the holiday season and travels, looking into next year, there will be another oil and gas fund that we're going to put together. We've done 2 over the past few years that are going really well, and so we're going to put together a third fund next year, probably Q2 timeframe. To your point, I'm looking forward to real estate coming back around and becoming a little bit more active there. Now is probably a phenomenal time. Great cost basis to jump in and find good value. And yeah, it's really just about keeping the different parallel diversification paths going in our portfolio. So we're going to try to stay very active from that standpoint.
That's awesome. Yeah, I think keeping active, like you guys, I think are really good about keeping, when real estate, you toned it down, you still were active within the groups. And look, I'm sure you're looking at some things just to see if they're penciling out. It's keeping your tools, your shovels or your knives, whatever it is, sharp for when there is time for action, you're ready to go. So I know you guys are going to be poised when a deal does pencil out. And people that are listening, like Adam was talking about some of our peers that one of those people that I know that have bought things, they were underwriting deals. A lot of people are like, there's nothing going to work out. And most deals didn't pencil out. But if you're out there making offers, eventually one's going to stick. And but you got to also don't get discouraged or frustrated and start don't get outside of your guidelines. Keep your underwriting within your boundaries, and one of those deals is eventually going to pencil out.
100%. It's all about the effort. And to be quite honest, I mean, we were all buying real estate back in 21, 22. Today's cost basis, today's value likely is a lot better. Definitely, most definitely is probably a lot better. So, I mean, if we were buyers back then, there's a good argument to be a buyer today, right? And I think
it's a better argument to be a buyer today.
There you go, right? Yeah. So to your point, even if the market's not a ton of deals on the market and sellers aren't, meeting certain pricing, guidelines, it's still a great time to be active because to your point, you don't know, right?
Well, and you're building those relationships with the brokers, showing that you're in the game and that you're active. And when one does pencil out, or if you just miss out on a few, I think the brokers start rooting for you a little bit.
100%. They know who you are.
Put a little thumb on the scale for you just a tiny bit.
Yeah.
Awesome. Adam, thank you so much for your time today and sharing tips and insights with our listeners. If people would like to connect with you, what's the best way for them to reach out and make contact with you?
Yeah, my email is the best way. It's adam@aeinvest.net.
Awesome. Thanks. What a great show. Everybody, thank you for tuning in. Adam, thank you for joining. And all listeners, please like and share this episode and pass it along to your friends. Everybody have a great day.
Thanks, Nick.
Adam. You bet.
Thanks for listening to the Flex Forward podcast. If you've got grit, growth, and a great story, visit flexforwardpodcast.com/guest to apply and join us on the show.